Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy Live Trading Room, live streaming from Ticket Tucker. We're going to be on location this whole week, so please bear with us for any unprecedented surprises that we may have. But getting right into the market here, taking a look at the gold market at 1806.80 in gold, up 29.40. We are picking up the momentum. We are continuing with the momentum that we came in, that we had last week, and we're moving into what is called an area of distribution of supply. So let's see how the demand up here handles the supply that potentially may be coming in here at 1810 to 1821 in the gold market here. 1821 is the weekly target. 1810 is the sell to target for the day. Let's just keep an eye on the market here for a bit. We have silver up 54 cents, 27.7950, and it has not yet met the target of 28.02, which is the daily target for silver. Continue to hold your long derivative position, continue to hold your long directional signal. We're trading above the 1800 handle in the gold market, and that's pretty significant. We're back above 1800. We saw this massive attack here of short selling that brought the market up to 1759 last week. We recommended to grab these levels here as they came right into the extreme below the mean, into the daily, the weekly, almost coming down into that 1752 weekly signal. These are the initial numbers for the week, and we're going to double check those numbers as the day progresses here, but we just updated the algorithm to identify for us the targets, and we will continue to update them here as the market begins to trade into these areas here. But just hold your longs, be patient here, let the market come to us. The sell one weekly target is at 1820, 1821. The average price for the week is 1780. The metals are getting a lot of publicity here as we move into this delivery date for the expiration of the March contracts. There's a large outstanding number of longs that are willing to take delivery. And the physical market pretty much is running out of supplies. The cash market is pretty much very tight. Premiums are in silver, in some cases, $8 to $10 above spot, which is a huge premium. In gold, it's $70 over spot. So we feel, I think this is beginning to feel very much like the same situation that we had back in March last year. I think the difference here is that we have the whole world now paying attention, particularly to what's happening here in the silver market. All the derivatives in the metals are sharply higher this morning. So we seem to be getting a broad movement in gold here. GDX, the VanEck Vectors ETF Trust, is up 33.50. At 33.50, up 76 points. And I think the gold mining shares are very much, I believe, oversold. As we see here, prices have broken the lows of last year, of November. In looking at the Fibonacci fan lines, if this level is to hold here, which according to today's action, looks like there was a major reversal here this morning, all the way up to 34.66. And obviously you can see the interest in accumulating this and buying this. And I think at this levels here, it's certainly very attractive levels. By the way, the numbers here are not updated on this chart, so please do not use these numbers. They're not updated as we begin the week here. We're beginning to update a lot of this stuff. So I'm just showing you basically the instruments that we are trading, that we are suggesting our private traders in our Discord trading room to begin to accumulate. This is Nugget Direction Shares ETF Trust. This is a 2-to-1 velocity ETF, so it's a little aggressive. It's a little more aggressive, obviously, than a 1-to-1 regular GDX ETF. So you want to measure this for short-term trading. A lot of volatility is offered in these instruments enough that you can manage the risk, you might say, that you have on a futures contract. For example, if you want to hold a position overnight, you can park your money into some of these instruments short term and accomplish your goal, your target. Most of the action that we see here in the metals markets are beginning to take place in Globex, when the US is closed, and most US investors, traders, do not have a chance to sometimes unless they're trading Globex, to buy into this lows that are traded on the Globex. Most traders are not familiar yet enough to be able to trade Globex. But the markets are virtual. They are open 23 hours a day. Between Asia, Hong Kong, and London, and the US, you can literally trade around the clock. One of the comments that I want to make here, over the weekend, I kind of spent some time. I'm on location, so I had some time basically to take a look at what I see on the internet and what some of the people are talking about with regards to silver. And for most of that information with regards to the short squeeze, or the favorite word right now on the internet is the short squeeze, the reality is that I think the Reddit crowd really has awakened the interest of the world globally about the situation in the silver market, about the situation in terms of how the price is manipulated in the gold and the silver market, particularly by the commercials category that involve a group of about 8 of the largest central banks. And under those central banks, who knows what kind of traders are behind that as well, which may not necessarily be central banks. So the fact of the matter is that if you go out into the cash market and you try to buy silver right now, the premiums are just phenomenal, first of all. So it is a real situation. It's getting worse, particularly in the London exchange. So we are looking at how COMEX is going to deal with this massive short position that's still on the books by the central banks. And according to the Commitment of Traders report, if you take a look at it every week, comes out, the commercial category is still short in the neighborhood of about $40 billion of short contracts. They have not liquidated. In fact, I believe they have continued to increase their short exposure. And the problem is that since there is no physical, no cash, this short sellers cannot offset their futures position by exchange for physicals, as they do, as they have been doing since 2012. The problem is that there is no cash, there is no physical for them to be able to cover, so they're going to have to move into the futures markets. And it's a massive, massive short position. If pushed to cover, we could see prices skyrocket pretty much in gold and silver, without exaggeration. The Reddit crowd has put the limelight on the problem in the silver market, in particularly the cash, the physical market is, from what I understand, not just beginning to show up in the small coins or denominated silver instruments available, but it's beginning to show up on the 1,000 ounce bars that are primarily used by industrial demand. And if we have industrial demand begin to panic about the shortage or about the availability of supply, and what we're talking about is really, companies in technology, some of the biggest, Apple, NVIDIA, on and on and on, that use silver to produce their products. CNBC announced this week that there's a massive shortage of computer chips. Silver is used in computer chips. Silver is being used more than any other time in the new technology, solar panels, and the prospects are explosive. And so when you really take a look at gold and silver, it's really hard to believe that they are at this price levels. In comparison to what Bitcoin is doing and some of these other virtual currencies are doing, which is where the money has gone as an alternative for what potentially we're looking at down the road with all of this stimulus coming into the market. And that is an inevitable inflationary cycle. So I'm looking really as a trader in terms of this as an incredible opportunity to position myself in terms of expecting the kind of volatility that I believe this is all going to bring about the markets. My advice that I continue to provide my traders in my Discord room, and as a courtesy, I'm sharing with you in this live platform every day, is be patient. Be patient with silver and gold. Silver in particular is taking the lead. Silver is a very explosive metal when it goes, particularly, again, if we awakened the giant, which is industrial demand. There is really hard to measure what potentially can happen here. If I can, explain to you in another way, silver is like a pressure cooker of manipulation. Where it goes or when it goes, nobody knows, and where it stops, nobody knows. But we could be looking truly, as this fundamental situation unfolds, we could be looking at over $100 silver relatively fast. The silver market is the most undervalued asset across the board of any asset in comparison. Not only are we running into a physical supply problem, because not only the actual availability of silver is scarce, but the pandemic on top of this has pretty much prevented additional gold mining productions. So the only companies that are in a position to really benefit by this are gold shares, gold mining companies, developers, explorers that are in a situation of a cash flow, which most of these gold mining companies are in a tremendous position to offer tremendous opportunity. If you're into individual, stocks and so on and so forth, particularly some of these shares are, I believe, tremendously undervalued. For my purposes, I use the GDX to simplify my trading so I can use a complex, a combination of 3 or 4 different instruments that I can measure how aggressive I want to get. And this is what I share in terms of the application of the VCPMI in identifying some of these undervalued opportunities, in the derivatives markets, for example. One of the things that I have been recommending here, and I am personally doing this, is I am accumulating a long-term gold core and silver position. Any short-term trading that I do is to accumulate a long-term position. I think the metals are tremendously undervalued, and I don't think we've seen yet what the metals can do. They have been dormant, allowing Bitcoin and all these virtual currencies to take the limelight, but they're not real currencies. They're not real assets. The virtual trading assets. Gold and silver is a real asset. So we're looking at a situation in the metals that is a combination of obviously this pandemic that has tremendously disrupted the economic balance. We still haven't yet come out of this black hole, so to speak, that we got into, but there are signs. And so that's the other balance of this equation that I believe is going to have a tremendous impact, is that when we go back into the economy, it's going to be a question of how aggressive that velocity is going to be. That's going to determine basically the pricing of all those goods that are available, if they are available. Silver is not available, therefore the prices are going up. The prices of grains are exploding. The prices of crude oil is exploding. I'm not sure that, our leaders in terms of monetary policy, are looking at what's happening here in the commodity section. The markets are beginning to recognize that inevitably what's down the road are inflationary prices. I think the question again is going to be how fast we're going to see that. And in an environment where we've been locked down for now a year, pretty much, people are desperate to come out and spend and have some kind of normal life. And I think that's going to be a big surprise. So I am very comfortable in telling you, be patient with the metal. Just, let the market do what it's got to do. And whenever you get an opportunity, any corrections like we saw last week, which was just a blatant attack, and it was right after the market closed. It was about 3:45 p.m., I believe. But here we are, almost at 28. And tremendous buy-in is coming in against this massive short selling position. Major reversal today. Getting above 1800 is very significant, and we recommended our traders last week pretty much in my private trading room that they cover any short hedges, any short positions, and you can review my videos. Pretty much, this is what I've been saying here. We're getting into a fast market in gold. Let's just keep an eye on it for a little bit here. If we go through the 1810 level, we'll be getting back up above the annual average price, and I think from that point on we can accelerate through these targets here, going back up to that 1874. And again, what I am, respecting is the fact that what I'm looking at here is a slew of red signals, red signs. You might say that is indicating that the price is entering a level of resistance or supply into that 1810. But if you take a look at above 1810, there's nothing really all the way up to 1821, which is the weekly level now as we come into this week, and all the way up to 1858. There's a vacuum right here. So it potentially, if we can get the buyers to get this through this level here, you could see an acceleration into that 1858, 1874 level. This is a broad move across the board. Picking up a lot of momentum here in Nugget, up 3 points, 59.19, activating a buy signal. So we're very comfortable holding on. Continue to hold on the long side. What you see here on this chart is a descending wedge. This wedge here, this level here is the resistance of this channel, this downtrend channel that is actually pretty bullish. We get a 1815. Yeah, it's 1810, 18, we get through this little bit of resistance here, the market's gonna accelerate. And the daily, even the Bollinger Band, the upper Bollinger Band even points to exactly almost 1874. And that's the upper end of Bollinger Band. So, I'm comfortable to tell you that we're getting confirmation that this was a major bottom here, what we saw this week. This acceleration validates and confirms it. And now it's just a question of the market picking up the momentum. And silver as well is following through, picking up momentum. 2802 is next target, 2802 to 2826. $91 traded, $27.91 traded. The silver market is becoming very, very popular, and the charts look fantastic. You know, you take a look at this channel here. It looks very, very constructive. 3035 was the high that was made on the Reddit raid Wall Street bets on early February that the short sellers were able to contain this market taking off here, literally like a rocket. And this is the battle, the fighting battleground between the shorts and the longs. There's a massive amount of money on the short side of the market that is at risk if we get this market to break out of this range, and potentially it can get up to the upper end of this like 42 level really relatively fast. There's nothing above here. It's like a vacuum. And when you're looking at the market like a pressure cooker, and you're taking a look at what silver has done in terms of volatility, wow, pretty exciting what we could be looking at here when we can be looking at silver moves of $4 or $5 moves in a matter of days, if not one day, possibly. And I do believe with a lot of the reports that are being published, I looked into the cash market, there is a tightness of supply, particularly in the London exchange. And there is a question as to how, SLV was able to get the so-called physical silver that they claim they got. But there's a question even in terms of some of the policies. They're changing their perspectives. There's just a lot of things that are happening here in the cash market that are indicative that there is a problem with supply. 1810 is the gold sell one level, 2802 is silver, and we saw a test here a little earlier, 2808. This occurred last night. About 7:15 p.m., the market made a high of 2808, 2807.50, and this was right into the sell one level of silver at 2802. So this was the Globex activity that I mentioned earlier. That from about 8 o'clock p.m., we saw massive selling here take place after it accomplished the sell one level, the short selling. That really doesn't make any sense. That the market will drop, from 28 almost down to 26, 26.50, $1.50 in, one trading session. This is irregular for the fundamentals that we're dealing with right now. This is not a real price. It's a futures price, but it's not in the cash market. So I think, again, what could happen is a similar situation as we had back last March, where the futures markets collapsed to 1450, as we saw for gold. Silver came down under 12, and but you couldn't buy gold, physical gold, without having to pay an $80 premium above the spot price. Became inverted. Cash market became inverted. And that's an explosive situation. And obviously what you saw there was gold rallied $600 like with the blink of an eye. $630 with a blink of an eye. But this is just the beginning, guys. This is just the beginning. And they've been able to get the price come down into this Fibonacci 50% Fibonacci retracement that we saw this week, a little bit under, and the big players came in. The big guns came in. And this is a beautiful descending channel. So it could be that we're on the verge of a breakout again on a close above 1810. Getting a little bit of quiet up here. In terms of day trading, unfortunately, there is no trades here today for day trading. The core position is obviously long, and unless you came in with a swing position, there is no signals for day trading. So most of the day here, I'm going to be nursing my profits on my core position. You might say that we're building nicely. And, when there is nothing to do, really, there's nothing to do. according to the VCPMI. You want to hold on to your position. If you, based on your profile, you have some profits up here, that you have made over the last few days. This is a good way to manage those profits. But again, depending on your profile, it's a question of how you manage the risk in the short-term, intermediate, and long-term trends that we're trading. So we're not really day trading today. There are no day trading signals, but we are holding a swing. We are holding a core position, a directional position, and we are suggesting just hold on because I think we got more volatility coming. 920 traded, 1809 traded. We're beginning to see 1810 right around the corner. Nine ten, 1809, 10 traded. Nicely moving up. Mm-hmm. 1800. The fact that the market is trading above 1800 is pretty significant turning point. And if we can get the silver to trade above 28, that's going to be more bullish and attract more buyers into the market as we begin to pick up the momentum. $18.09. Silver charging towards 2802. Our first target daily, 2802. Our second target is 2867. A little quiet with a bullish bias here across the board. So we're just going to continue to be patient and just hold your position comfortably. There's nothing to trade. Just, we don't need to trade you. If you are long, like we've been recommending on your derivatives, ETFs, you're making money this morning. And it's pretty early still. So I think we're going to be getting a lot more momentum buying into the market, and I think there's a lot of buying interest here that is looking for some kind of a correction again, a little bit of a correction to be able to get into the market. But we get through 1810. I'm not sure that this thing is going to be coming down. The SLV is the one that is taking the center of attention of the silver ETFs, and due to the expectation potentially that this shortage of supply pretty much is affecting them tremendously, and they're having a hard time getting metal. So we had actually one of the biggest silver traders, Eric Sprott from Sprott Asset Management, purchased about $38 to $40 million worth of SLV. Pretty big play, and you can see the beautiful channel here on SLV, up 60 points, and we're up 2.5%, and we're looking at 34 pretty much as the upper end of this channel here from 25, 26. So that's a nice move. GDX moving back up again. Most of this derivatives are in a pretty much what I call a descending channel formation that is pretty bullish if it breaks out the upper end of this channel. I think one of the most difficult things to do as a trader is to do nothing when there is nothing to do. As a trader, we always feel that, wow, the market's up, it's up 32. What do I do? What do I, what's up? You feel you need to trade. And sometimes trading is not just writing tickets. Trading means sometimes doing nothing, absolutely nothing, but allowing the market to come your way. If you position, if you're long, don't get confused or influenced by the chatter short term. And this is one of the things I believe that the VCPMI has given me as a self-directed trader, which is what I'm really kind of trying to share this with my subscribers, my traders here in my private trading room, and that this tool gives you the confidence to make better decisions. And when you trade with confidence, it makes a big difference than when you trade with panic or scared money. Very significant move up in silver and gold today. Markets are just reverting. As pretty much we've been expecting based on the VCPMI. $1809.70 was the high so far. We're looking for 1810 to go through 1810, a close above 1810. We want to see that, and we want to see the market take out the 1821. Continue to hold your long derivative position. Continue to hold your core position. There's no trades right now in futures. Day trading futures. $960 trade. It looks like we're going to be taking out 1810 in the early part of the morning. This is pretty strong buying coming in. Due to the market trading through the resistance level of sell 1 and sell 2, particularly as we got in through a 1796 this morning, the fact that the market went through that, or if it goes through that distribution of supply area, it really recommends for you not to go short, to open a position up here, but simply to take profits and wait to buy on corrections. And ideally, the corrections into that B2 level, into that buy 1 or B2 level that you see here, as we did last week. The market has taken out all of the supply that was offered last week, the short side, all the short pressure. The 1810 level is very important level, as it is the annual average price. As you can see here, actually, we came in, and on the right side of the chart here, we're looking at the monthly numbers as well as the 9-year cycle numbers, and you can see the chart coming into this descending channel formation, right into the support level, right into the 1781 buy 1 monthly level that we've been trading all through this month, since the beginning of the month, and activated a buy 1 level monthly, and now we're moving into the 1810 area that if we again close above 1810, it's going to bring in the weekly bullish uptrend momentum, and that puts into place again that 2164 level that I keep referring to. In between the monthly target is 1874 right now. So we are entering a very important area, which is the average price is, you might say, aligned between the monthly, the annual. That are pretty high probability that if we do get the price to break above this, particularly again, if ideally we get through 1874, I think we're going to be accelerating obviously into the target of 2164. But we do have resistance up here. And what we want to see is the thrust power that the gold market it's going to have here by pretty much coming out of this bottom that we're looking at. Continue to hold your long positions, continue to be patient, particularly with the silver market, and any corrections here, I'm recommending just continue to add to your position. Thank you again for the opportunity to share this with you, my friends. In the meantime, have a great week. Have a great trading week, and I'll talk to you next time. Take care.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
Steve Collegian here with John Najarian, folks.